Where are we at in this bear market cycle? Is the worst behind us, or is the worst yet to come? Hello, I'm Crypto Casey, and in this video, we are going to explore what is within the realm of possibilities when it comes to figuring out where we are in this market cycle using the Wall Street cheat sheet, while also considering other data, factors, and opinions. Wednesday AMA, or Ask Me Anything, on my Instagram stories is back by popular demand, so be sure to scroll down to the description area below to access my only official social media profiles. Anything not listed here is 100% a scammer that will message you and ask you for money or crypto. So beware and stay vigilant in these crazy times, crypto fam. Awesome. Let's explore the market cycle. Behold, the Wall Street cheat sheet. This chart depicts the psychology of a market cycle, highlighting the feelings appearing as the market fluctuates. On the x-axis, or horizontal line here on the bottom, we've got the variable time. And on the y-axis, or vertical line here on the left, we've got price. So from left to right, let's explore the different phases of a market cycle and the typical investor sentiment associated with each. The first phase here on the bottom left is when a bear cycle has come to an end. And the emotion commonly associated with it is disbelief, where people think, this rally will fail like the others. Next, as the price continues to increase over time, sentiment shifts to hope, where investors start believing a recovery is possible. More time elapses and prices start surging as investors feel optimism, believing this rally is real. Following that is the belief phase, where investors decide that it's time to get fully invested. Prices continue to surge higher, giving way to the thrill phase, where investors say, I will buy more on margin. Gotta tell everyone to buy. Until finally, prices start peaking as investors experience euphoria and thinking to themselves, I'm a genius, we're all going to be rich. But then prices start to fall, ushering in complacency, where investors think, we just need to cool off for the next rally. And then prices continue to fall, bringing about anxiety, where investors ask, why am I getting margin calls? This dip is taking longer than expected. Prices move further downwards into the denial phase, where investors think, my investments are with great companies, they'll come back. However, prices dive deeper and people start to panic, thinking, shite, everyone is selling, I need to get out. Which leads to the capitulation phase, where investors say, I'm getting 100% out of the market, I can't afford to lose more. Prices sink further and trigger the anger phase, where investors ask, who shorted the market? Why did the government allow this to happen? And just when everyone thinks it's the worst it's going to get, it gets worse and ushers in the depression phase, where investors say, my retirement money is lost. How can we pay for all this new stuff I bought during the bull cycle? I'm an idiot. After the market bottoms out, the cycle repeats itself. So as prices increase, we move back into the disbelief phase, where investors think, this is a sucker's rally. Sweet. So where are we in this current market cycle? Well, here's the chart with the last bull and bear cycle overlaid on top of the Wall Street cheat sheet. As you can see, it's pretty dead on. We've got the build-up during the summer of 2017, the insane rally up to the euphoria phase where we reached previous all-time highs of 20K in December 2021, followed by some complacency in January 2018, and a slow, extended bleed out, all the way down to depression level bottoms in Q1 of 2019. Cool. Now here's the chart with the current price action overlaid on top of the Wall Street cheat sheet. You can see it looks a bit different. We've got the run up to euphoria levels back in November 2021 and downward price movements since then. And though Bitcoin is down over 50% from our most recent all-time high, you can see that the downtrend isn't as dramatic. So there are a few different ways we can interpret the chart. One, the massive drop in liquidations we experienced after the Terra Luna debacle could have been the panic and capitulation phases playing out, which would put us currently in the anger phase here. If this were the case, then yes, we still have more pain to endure through the depression phase where the market bottoms out. However, due to the lack of more dramatic price movement like we've seen in the past, we could also actually be closer to the anxiety and denial phases, meaning that we still have panic, capitulation, anger, and depression ahead of us. Or following the Terra Luna meltdown could have been the depression stage, meaning the worst is behind us and disbelief is ahead, marking the end of the bear cycle. And some prominent people in the financial sector believe it's a possibility. This week, Cathie Wood says crypto bear market may be close to the end. ARK Invest's Cathie Wood says the correlation of stocks and crypto is one way to recognize a bear market, and that it could even signal the beginning of the end. Wood also thinks the Federal Reserve may not raise rates by 0.5% in June. Cool. So there are a couple reasons why I disagree with Cathie. One point the savage Finn Henrik keenly points out in this tweet: the Fed sure seems to have stopped caring about the market once they were banned from insider trading. And here's a chart showing stock market prices correlated with the date an article came out titled "Fed to Ban Policymakers from Owning Individual Stocks and Restrict Trading Following Controversy." As you can see, stock prices have been tanking since. So I don't think the Fed is as incentivized to keep the markets as high as they were when they had some skin in the game. Although rate hikes are most likely going to occur over the summer, there is a historically bullish event for markets that will take place later this year. Midterm elections in the US are happening this November of 2022. And whichever political party is currently in power has a lot of incentive to make sure the markets are performing well during that time to secure votes. And just like clockwork this week, Atlanta Fed President Bostic says the baseline is to pause rate hikes in September to assess its impact. After approving 2 more half-point rate increases at coming June and July meetings, it might make sense for the Federal Reserve to pause further hikes as it assesses the impact on inflation and the economy, Atlanta Fed President Raphael Bostic said on Monday. Amazing. So, with midterm elections, historically bullish markets towards the end of the year, and the Fed already considering a dovish stance during that time, it seems like we may be in for a pleasant surprise in Q3 and Q4 of 2022. However, it's anybody's guess. We've still got a lot of uncertainties in the market with the Russia-Ukraine war, a potential monkey wrench with the monkeypox situation, and at least 1 or 2 confirmed aggressive rate hikes during a historically dull summer market-wise ahead. Either way, another reason why I don't think we have seen the bottom yet and have more pain to endure is based on the Bitcoin NUPL chart. NUPL, or NUPL, is an acronym that stands for Net Unrealized Profit and Loss. And the Bitcoin NUPL chart uses a set of metrics to help investors try to time Bitcoin market cycles. This chart compares the price of Bitcoin at 2 different points in time. One, the current price of Bitcoin today, and the price of each Bitcoin the last time it moves to a wallet, which is called the realized price. Basically, the chart helps answer this fundamental question. If all Bitcoin were sold today, how much would investors stand to gain or lose? Or more simply put, how much of Bitcoin's circulating supply at any given point in time is in profit or at a loss, and to what extent? Cool. Let's take a look at the current state of the Bitcoin NUPL chart. So similar to the Wall Street cheat sheet, this uses phases like capitulation, hope, fear, optimism, anxiety, belief, denial, and euphoria. As the price chart changes over time and considers the variables we just went over, the color of the line changes to represent which phase we are in. Every time in the past that Bitcoin reached new all-time highs during a bull run, we can see the lines breaching into the blue, euphoria, and greed phases. Zooming into this current cycle, we can see we actually never crossed into the euphoria phase, though we got pretty close here back in January 2021. So that is one difference between this market cycle and previous ones. However, every time we were in a bear cycle historically, we touched the red capitulation phase. And zooming into the present day, we have only barely touched the threshold of the hope and fear phase, which means we could bounce back up just as easily as we could tumble down to that red capitulation zone we haven't seen since the onset of COVID panic back in March 2020. As usual, the future price of Bitcoin is definitely anybody's guess. We are living through unprecedented times. This is the first cycle where we've got institutional investors in the game. Crypto tech is developing and gaining adoption. There's just a ton of differences this time around. So my wild random guess is that we still have more pain to endure and can go lower. I'm not sure to what extent, and I do not recommend trying to time this market to buy big at the bottom. Instead, DCA or dollar cost average into positions to take advantage of these bear market lows while you still can. If you haven't already, click on the link above to check out my bear market series so we can all do our best to get ahead together through this cycle and come out on top in the next bull run, whenever that may be. Awesome. Thank you so much for taking the time to watch this video. If you enjoyed it, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So, what did you think of the charts we covered? Where do you think we are in the market cycle? When will the next bull run be? Let me know in the comments below. Be safe out there.